Well, it gives me great pleasure now to bring on board Mr. TT Srinivasaraghavan to talk about what is happening to Sundaram Finance, how are they seeing the rural recovery, and what is happening to their part of the business, which is largely centered around CV and rural financing. Mr. Raghavan, good morning. Thank you for joining us. What is your sense on how the economy is recovered? Last time when we spoke to you, you were using words like you wanted to protect your balance sheet, you were cautious, you said we've never seen such a thing before, so it's very early for me to say anything forward-looking. Are things looking better? Do you have a clarity of thought and a clear line of sight now?
It's not a one-word answer, but yes, if I were to give you a one-word answer, it is better than when we spoke last. So surely, I think a lot of the negativism which we felt then, I think some of it has started to lift. But I will continue to echo what I said earlier in terms of prudence, in terms of protecting asset quality, in terms of conserving capital, because I think that has not changed. For, as you know, the moratorium has ended just 10 days ago. So we're really now moving into the real world. After 6 months of what I would call a surreal existence, we are now moving into the real world. So I think the next 4 months, ending December, are therefore going to be very crucial from an asset quality portfolio preservation perspective. But parallelly, certainly, we are seeing growth coming back, albeit in a few select segments. To give you an idea, our disbursals in August were at about 70% of August last year, right? And September is looking similar. It might be 75% or a little more. So there is some activity that has certainly come back, but it's definitely, the language is still of prudence and caution. I don't know if that answers your question, but that's where we are at.
Why are a lot of companies indicating and claiming that they've gone back to 80%, 90%, or even pre-COVID levels? Should we take that with a pinch of salt? Because you have an understanding of how credit in the market is moving. If the credit in the market is moving, then why auto companies, consumer companies, paint companies, they are telling us that, look, things have normalized and demand has really pleasantly surprised them. Is there a disconnect? Do you think this is pent-up demand which will fade out again?
I believe is pent-up demand. And also, I think it's useful to bear in mind, given the size and diversity of our market, what somebody says could be true for one geography and not true for another, right? So there are also regional variations, which we are seeing ourselves in our business. There are also sectoral variations. For example, you talked about rural. So if you talk to people who are heavily invested in rural India, they would tell you that it's a party, right? And it actually is looking like one. Similarly, if you look at the infrastructure segment, I think there's been a big revival in terms of projects that were held up, new projects, so on and so forth. And if you would check the numbers of the construction equipment companies, the guys who sell excavators and backhoe loaders, they will tell you that things are really booming. So there are parts of the economy which have bounced back, and I don't know if pre-COVID or not. I mean, those are opinions, but certainly in some segments and in some geographies, there is a much greater rebound than there is perhaps in some others. So this would be my response to that observation.
Sure. So, Mr. Raghavan, let's put this into numbers then. What, according to you, would be the growth drivers then going forward? Sure enough, like you said, it's the rural end of the market which is the big kicker. And where do you see the disbursements then, in that case, by the end of FY21?
See, I've said this before, and I'm happy to say it again. Uh, I think for FY21, I don't think growth should be sort of the primary focus, right? If we can get, but I wouldn't be chasing growth as my top priority, right? Because if you look at players like us who are heavily wedded, for example, to the commercial vehicle segment, commercial vehicles for the first 5 months have been virtually a non-event, right? Except for some activity at the lower end, the smaller commercial and light commercial vehicles, the heavies have been virtually a no-show. And our own estimate is that optimistically, you could expect something to happen in Q4, right? And even that, as I say, is optimistic. My own sense is it will probably be FY22 before medium and heavy commercial vehicles see a revival. So what we're talking about now is one segment of commercial vehicles, which is tippers, which goes with the construction story. The lighter and smaller commercial vehicles is the other piece. And pass car, which again we've spoken about before, because people are now sort of prioritizing safety and would like to avoid public transportation, they're probably tending towards buying either entry-level cars or second-hand cars. And of course, tractors, right? Because everything is about rural. So these are some of the segments where I think growth is realistically possible. We have seen some of it, as I said. But to Nikun's point, I think it's important to wait and see if this sustains or it's just a pent up, which is sort of got released and then it peters out, which I hope is not the case. But I don't think we should dismiss that as a possibility.
So, given what we know as of now, would it be safe to assume that your product mix is going to be skewed more towards tractor financing, perhaps?
Not only tractor financing. Let me say it will be skewed away from medium and heavy commercial vehicles. Right? It's not going to be only tractors, obviously, because there's only so many tractors you can finance without, committing harakiri. So no, but certainly yes. I think other asset classes, which is already the case, going into the 6th month of the year, to my mind, for the first time in our history, commercial vehicles is not the top asset class, that we financed in these 6 months, which is a day I never thought I'd live to see. But yes, it will skew away from medium and heavy commercial vehicles for FY21. But it's something that is reflective of the reality.
Sure. Now, a lot of players have been raising capital in this space. Except for Sundaram Finance, all the NBFCs have a capital adequacy in excess of about 20%. So do you have any plans going forward? Are you sufficiently capitalized to leverage on the opportunities coming up?
Yes, we are absolutely well capitalized. We don't see the need to do a capital raise, but you're probably the 100th person to ask me this question. Everyone asks us this question, but we are comfortable where we are, absolutely. And it's not that we've not discussed the option, given that everyone's doing it. We too have evaluated it, but we're very clear that we don't need to raise capital at this stage.
Sure. Okay, on the NPA front as well, given that the moratorium has ended, what's the picture looking like? Have customers started paying back? What are the kind of trends that you're seeing on asset quality?
Too early to talk in terms of trends, but yes, people have started repaying. Collections are starting to flow in. My own sense, and I've said this before, my own sense is in Q3, we will, when I say we, the industry will see a spike in delinquencies. We'll see a spike in NPAs. Now, how much it will be, etc., I think, as I said, it's too early to tell. And also keep in mind that the rescheduling, restructuring window has also opened up parallelly, right? So that is in many ways going to camouflage, or it's really going to smoothen over what real NPAs people might have otherwise reported. So it's going to be a tough one to call in terms of what the numbers will look like. But honestly, if people were to tell you the truth, they would tell you that, definitely delinquencies will go up, NPAs will go up.
Fair point. Markets would say that, look, ultimately they vote for growth. Are you being extra conservative and cautious here?
Like this, markets have their own view, and for a good reason they have their own view. But I think the primary responsibility for any lender is to make sure that, he acts as a custodian of the money that has been handed to him, either by depositors or by lenders. So I think our primary responsibility is that of custodians of public money, right? Growth is fine, right? And growth is very important, but it cannot be growth without any emphasis on quality or profitability, right? This is not something where we can do a fire sale and say, I've disbursed huge amounts of money in 3 weeks flat, right? That doesn't work, or at least it doesn't work for us.
Okay, Mr. Sriram Raghavan, thank you so much for taking the time out and speaking with us today. Good to have you on the show, and good to so candidly get your views on what really is going on with the business and the overall economy per se as well.
Yes, thank you. But please permit me to say that my name is Srinivasaraghavan, not Sriram Raghavan.